Good morning to you all. Welcome to another episode of our videos on strategic financial management. In this case, we'll be considering replacement decision. Replacement decision. Replacement decision focuses on the determination of optimal replacement strategy in respect of an asset used by a firm for productive purposes. As a matter of fact, in asset replacement decision, we need to consider the frequency at which assets should be replaced. Whether assets should be replaced annually or every 2 years or every 3 years or every 4 years. So we need to determine the optimal replacement cycle. And in determining that, we also need to obtain equivalent annual cost. Equivalent annual cost for every replacement cycle. Equivalent annual cost for every replacement cycle. And to determine equivalent annual cost, which is known as EAC, we need to obtain the present value of cost over the replacement cycle. Present value of cost over the replacement cycle divided by DCF over the replacement cycle. Our equivalent annual cost is the present value of cost over the replacement cycle divided by the DCF or discount factor over the replacement cycle. In determining the present value of cost, we need to consider some cash flow items such as running cost of the machine or running cost of the asset. We also need to consider the residual or scrap value of an asset. Running cost is the operating cost of an asset for each year. The running cost will be provided by the examiner. We also have the residual value, which is the scrap value of the asset over the replacement cycle, or the residual value for a number of years. And then we need to know the capital allowance. The capital allowance over the useful life of the asset. We need to consider the capital allowance over the useful life of the asset. And we also need to determine tax saved on residual value, tax saved on capital allowance, tax saved on residual value, and tax saved on running cost, and tax saved on capital allowance. So all these items make up the cash flow over the number of years, over the useful life of the assets. So in solving any question, you need to consider the running cost of any asset given over the useful life of the asset, the residual value of the asset at the end of each year, the capital allowance, which is the relief which is claimable on the asset or on qualifying expenditure. We also have the tax saved on running cost for each year, the amount of tax saved by the company, and also tax saved on capital allowance. On every capital allowance claimable by a company, the proportion of tax saved also forms part of the relevant cash flow. In the next video, we are going to apply all these concepts to a typical examination question. Thanks so much for listening to this lecture on replacement decision. Meet you in the next video.